All opinions and views expressed by the speakers are not representative of views and opinions of RBC Dominion Securities, Inc. All information and opinions provided in this video are in good faith, but without legal responsibility.
Well, thank you everyone for joining us today at this presentation. Today is Wednesday, June the 12th, 2024. And today's presentation is on giving back, charitable giving. I'd like to first begin by thanking all of you for joining us in the presentation, and thank a lot of people who emailed me prior to this presentation with questions that you have for Angus. We'll ask these questions at the end, but I wanted to start by thanking each one of you to take some time off your busy schedule this afternoon to listen to this very, very important subject matter. Over the last many years, I've been asked many, many times what's the most efficient way of giving back. Many of us are fortunate enough to have enough resources to be able to give back to society, give back to our communities, and we are looking for different ways of giving back. Today, I have a special guest today to talk about this particular important topic of charitable giving and giving back. This gentleman's name is Angus Gordon. I'm going to introduce Angus, tell you a little bit about his bio before I pass the torch on to him. Angus Gordon is a philanthropic advisory specialist with the RBC Family Office Services. Angus has more than a decade of experience in charitable giving and legacy planning. He currently contributes his expertise to RBC Family Office Services, where he collaborates closely with advisors like myself, clients, and their families. Together, they devise tailored giving strategies and harmonize the family goals and values with the philanthropic aspirations and seamlessly integrate into their overall wealth management objectives. Angus possesses a distinctive insight gained from his involvement in establishing and managing a private foundation that provided donor advice fund and philanthropic solutions to advisors and clients while at Gluskin Sheff. Furthermore, his expertise, his extensive knowledge of legacy planning and capital campaigns and intricate gift structures stems from his previous roles at Sick Kids Foundation and RBC Royal Trust. Angus is a member of the Canadian Association of Gift Planners, CAGP, a co-chair of the GTA CAGP Educational Committee, and a faculty member of the National CAGP Estate Fundamental Course. He has achieved his TEP designation from STEP. STEP stands for the Society of Trust and Estate Practitioners. Philanthropic services, philanthropic advisory services. Angus works closely with people like myself, advisors like myself, to identify strategies and solutions that merge your individual charitable giving intentions and your financial goals and objectives in a manner that addresses your overall wealth planning needs, which you would then discuss with individuals like myself and Angus. So before I pass the torch on to Angus, I wanted to say this presentation will be in approximately 30 to 35 minutes in length and followed by Q&A. So if anyone out there who's got any questions for Angus or myself, please email them to me at karim.visram@rbc.com. Again, please email them to me at karim.visram@rbc.com. So without further ado, Angus, take it away.
Great. Thank you so much, Karim. Thank you for joining everyone and taking the time to sort of wanted to sort of go into the intention of doing more giving out there. It's extremely valuable aspect to do, and it's wonderful that that is what you're considering. Um, for today's session, we're going to sort of go over and do a little bit why people donate, get an understanding of the charitable landscape a little bit, explore the different ways to give that is beyond just sort of monetary. And then we'll sort of finish off with sort of touching on a little bit on incorporating charitable giving into your estate plan, because that's been a hot topic lately as we sort of progress. So starting off with, why do Canadians donate to charity? To get that idea, we need to get an understanding of what is the full charitable sector. So going back to March 2021, the number fluctuates a little bit, but you're sort of looking around approximately 86,000 registered Canadian charities in Canada. It's quite a bit. And so how's that broken down? So about 75,000 of those would be considered on the ground charities. So that's, your Harvest Food Banks, your Sick Kids Foundations, your CAMHs, multitude of smaller ones in there. And they are doing work on the ground that we're all very familiar with, right? They're going out, they're working in the communities, they're doing some sort of support that way. Then you have your other options, which we'll touch on a little bit later on, of private foundations, and I probably refer to them as private family foundations. And so that's where you get into sort of like the best example is usually sort of the United States. So think the Bill and Melinda Gates Foundation, right? Private foundation that way. So it's set up by individuals to run. And then you have public foundations, and these are ones that sort of constitute more along the people who do donor advised funds and community foundations. So we'll get into sort of those distinctions later on, but that sort of makes up the charitable sector as a whole, with public and private foundations being a indirect way of giving outside of just directly to charities. So looking at why people do give out there, we've seen the largest sort of impact is always people want to have, 55% of people recognize that they want to do it back to their community and have an impact in their local community. And local community means different things to different people. Sometimes it could be, Toronto proper that they want to support. Other times it's Ontario. Sometimes it's more on a national scale, but they feel that's part of their community. The other part is, they want to give back. Doesn't matter what sort of inclination that is to what cause. There's just that feeling of I'm in a position I can give back and I want to give back. And the last sort of largest portion of that pie is they have a passion for a cause. So in my previous experience with sick kids, I saw this all the time in which, a parent would have to unfortunately have a child utilize sick kids, facility in the hospital. And because of the care they received and the outcomes there, they wanted to give back to that hospital. And so that was their passion for the cause. And you find it for anything that you do. If you have a passion for it, there's a cause out there that you can support. Thinking all those ones that make up the biggest pot of the pie for why people give. The last part is, is taxes. Now we know it's not the most important piece in everyone's sort of decision making, but we know it is as a large component of it to make sure that you do it in the most efficient way, because with proper tax planning, you can give more than what you might have ever thought before, right? So you can have a bigger impact to the pieces that you care about, always taking that tax lens. So what are some other challenges that are currently facing the charities out there? We always see stats out there that, people are more generous, and maybe from a dollar point, there is more flowing into those charities, but actually the amount of people that have been giving is lower and lower and lower. So it's coming from larger individuals, high net worth individuals who are giving more. So that's where we're sort of seeing, and really coming out of the pandemic, we know that there's been a definite drop in sort of the amount that charities have received. Getting sort of volunteerism back up has been a challenge too, as that's been sort of balancing out. So interesting facts here that, we can see some charities on a whole will continue to do well because they're large, but a lot of the smaller ones have struggled over the years. And I think we see some of these, poignant points when we're looking at sort of the utilization of food banks is the pressures to come on from inflation and interest rates and whatnot, that more people are using that than ever before, but they might be actually raising less money because, and it's more stretching their abilities. So lots of things to take into consideration. So what are some of the benefits of people, of giving, and really why do people give? Sometimes it's, you have a personal fulfillment that you want to give out there. Um, a lot of times it'll start off as sort of a community engagement piece. Maybe you do it with your friends and family. Great way to get involved. Um, you want to have long-term impact in something. It's always, especially if you're, if you want to be part of something and see it grow through, you like that continuity of being able to see what you're doing, and even if it's volunteering, it's doing financial contributions, you like to see that effect and that you're having an impact there. um, Tax benefits are always a portion to it, but not everything. And there's abilities as well to sort of go off and get new skills from your volunteerism, right? There's a professional development avenue to it that we just don't think about by leaning in and volunteering and be able to take on different tasks within those organizations potentially that you might have wanted to develop for years. So lots of different reasons why people might want to give and the benefits of it. So how do people donate? So the first thing that we'll go through, and we usually call these the five T's out there, so is time. So this goes into volunteerism. So you're committing your time in there. And that is something that, no matter what, how much money you might have, you might put something towards it, the ability to, give your time is invaluable to these organizations, especially sort of smaller ones. It means so much to them, and it allows them to sort of go into other avenues that they don't have the staff for because there's support there. So what are some of the benefits that we know from statistics and surveys? We know that makes people happier when they volunteer. You get to connect with others that you might not have ever before. Could help in your career as well, right? There's a component of multiple people from different industries coming together to volunteer for a cause and get to know them. Who knows where this could lead, right? It's a networking opportunity sometimes, just to sort of get involved and see who else is interested in causes, because it helps. A cause can bring together people from all different walks of life. So when going through and you want to consider, where do I want to volunteer? The easiest thing to do is causes you care about. So, you know, where are you currently giving? Where do you think you want to give? What has your, what's in your heart that you want to support back and give back to? That's always a great way. Not every cause has the ability for volunteers, but you're able to sort of, there's enough organization out there that you might be something that you'll be able to find out there. Doing something you're good at or want or enjoy, right? We'll get into this a little bit later, but you can, if you're, you like playing tennis, right? There could be an opportunity for you to go in and work at a community center, right? And volunteer to teach a tennis camp or a tennis lesson for, underprivileged children or something. That's, it's using what you can. You want to do, volunteering should be fun, right? Giving funds and doing any sort of charitable sport should be fun. It's not a chore, it's fun, right? And then all this is balanced against how much time you have to be able to put towards it, right? It's all a mixture, right? And some of this work ends up being going into like board work, right? You might volunteer to join a board of directors. Do you have the time for that? Do you have the inclination to do so? Then yes, right? Treasure is the next T. Now this is one that we see the most often, right? And the one that we're most familiar with. It's giving cash, right? That's how everyone sees it. We're going to give a monetary amount to the charity to do good work. So there's just different ways to do that and figure out what makes the most sense. Want to touch on sort of good examples of some of the efficiencies you can get when doing it there, right? You want to donate funds to charity, and we'll use $50,000 as an example. If you went off and did cash, right? You could do cash, but depending on what it is, you might not have cash. Your holdings might be more in securities. So you're looking at it. You have $50,000 of RBC shares, and you bought those for 30, right? So that's your account adjusted cost base. So looking at an example, so if you went off and sold those securities and then donated the cash proceeds, right? You can sort of notice that you're looking down here, you're going to have a capital, you'll be subject to capital gains, and you have to pay tax on that. So if you just went off and tried to donate that way, you're not going to have the full amount available, and you have to find some other means to bump up that cash to get the $50,000 there. right? And you have a future tax hit. Now, what's made it's one of the most efficient manners, and it's sort of the point that we've always ensured that CRA sort of has maintained, and the charitable sector has been a big push for that, is ensuring that if you do in-kind charitable donations, you avoid paying capital gains, right? So that's where you can still go off, you do your $50,000 donation in this case, you would normally have a $20,000 amount that was subject to capital gains. Because it's done in kind, it's zero, right? So you've already saved those taxes. And so when you go off and you're doing your taxes at the end of the year, you have a full $50,000 of charitable tax receipts that you can then utilize towards other things to help reduce other taxes. So it's a nice win-win. The charity ensures they get the full amount. You've maximized the amount you can give and ensured that you don't have to sort of go off and be like, I've taken out $50,000, but I know I have to pay $5,300 in tax. So I need to, in a separate account, keep $5,300 somewhere else in cash because I need that for the end of the year. This, you can go off and you can utilize the full amount and just say it's all there. Talent is our next T. So this is really sharing your sharing your talents with sharing your skills. So great examples is doctors doing pro bono work, right? We've seen that all the time. You'll see hear stories of doctors will going off to Africa and doing surgeries down there. It could even be local where I've spoken with dentists who will do work for children with disabilities, right? And they'll bring in because those are difficult to find that, but they've do free work for those children to help them out. Maybe you're a grief counselor to some sort, and you go on talking on the phone. You're going to help the kids help phone or something, or a line like that, right? Doing some sort of support. That's good with their back. My tennis player example again, of going to a community center and helping underprivileged children. Potentially, maybe you're a math whiz or of some sort, and you want to give back. Well, maybe there's tutoring that you could try, right? It's really sort of leaning into what are my skills that I enjoy to do that I think I can teach others, and just leaning into it to help them out, right? This is something that, from a charity standpoint, they go, wow, this is amazing. We have expertise coming from outside that we can utilize, right? We don't have to pay for it. We don't have to search for it. They're donating their time and their effort to help us out in a ways that we could not do ourselves, right? It just wasn't in the cards. So you're helping them so much on this, and it's greatly appreciated. Ties is sort of expanding and looking for connections within your community, right? So sometimes it's sort of listening to opportunities, expanding those connections to bring you together, right? So usually it's sort of done in groups. It's one of the more subtly used ones, and it sort of blends in with some of the other ones. Specifically, sort of the next T as well, which is doing the testimony. This is sort of the most often one, and this is where just sharing your experiences with others. So this can come in all sorts of different ways. It can be informal, it can be informal, it can be formally. You'll see people who they might do RBC Run for the Kids, and you'll see posts up there on LinkedIn or on Instagram and their social media saying what they've done. It could be a blog post if that way. It could be simply as doing a dinner with a friend or friends and talking and saying, oh, here's what I've done recently, right? All of that is powerful for the charity. You're saying how you've been involved, that it means something to you. It brings that connection, that ties with other people, seeing that you're doing an activity with the charity, and they go, oh, I didn't know that about them, or I could do that as well, right? Like you're inspiring others to do good. That's what it is. This is it's the whole point. Don't sort of you don't do your charitable giving in a vacuum, especially when you're volunteering and giving your time in there. You let people know, right? When you do a financial gift, sure, that one's more common where people will be, I want to be anonymous because I want to avoid sort of future solicitations. But with everything else, it's nice to highlight what you're doing, especially with close friends and your community that you care about the most. So next is different ways to give to charity. So just going back to our initial slide that we had with the wheel of the pie chart of the sort of the makeup of the charitable sectors. So the 75,000 charities is the directed charity option, right? We're sort of familiar. You give $100 to the charity, they'll give you $100 tax relief back for $100. Transactions done, that charity is now using those funds towards their purpose. Then you have indirect giving to a charity, and this is sort of an intermediary in between. So I'll focus on private foundations and public foundations and donor advised funds particularly. So in this case, the idea is you would make a donation to one of those institutions, organizations. You get a charitable tax suite back for that donation amount. And then those funds are invested. And then grants are done out of those over time. So two similarities, but they're a little bit different on it. And these are the two most common methods that we'll find out there. Going through the differences of them, when looking at a private foundation, the account setup on these are more sophisticated that's required. So if you're looking for a charitable lawyer to help set those up and do the application with CRA to get your registered charitable number. So you're looking at about 6 to 10 months, if not longer, and at least $5,000. But depending on the complexity and the amount of work involved and where you live, it could go up to about $15,000. So really varies. All the responsibilities from being on the board and doing the audits and financial statements, reporting to the CRA, making sure you follow with the annual capital disbursement quota, which is set by the CRA. That's all on you, right? And whoever you are on the board with. So it's similar to running a business in that sense. Administrative costs, generally it's going to be an outside accountant is sort of be your biggest ongoing cost for that. Control, you'll have full control, right? It's your charitable foundation. So you get to choose where funds go to, how they're invested, what is your gift acceptance policy, how you want, what funds you accept, all that is for you to do. And the biggest sort of component at the end of this is, while it says it's private, it's actually very public out there in the realm. So all your financial information, including all the grants you make, how much his money has come in, expenses, liabilities, assets, all that, who the directors are all on the CRA website. So it's not as private, so people are able to sort of look, say, oh, here's what they've given. I can now sort of solicit them or whatever, if I can sort of find their information out there. But it's there, and that's a consideration. The alternative to that, and where we've seen a big rise in our industry, this is sort of extremely popular in the United States and the United Kingdom, where a lot of sort of the charitable giving sort of influx comes from originally for Canada, is donor advised funds. So really, you're sort of looking at that point of account setups is 3 to 10 days, not less. Usually, there's no fee to set them up. Sometimes they can be used sort of as a quick way to sort of do a large donation in and then move money out quickly as a flow through. Not all institutions do that, but some do. The administrative responsibilities aren't on you. They're on the existing foundation board. They all do that. And from a disbursement quota standpoint, depending on the organization, it could be blended, right? So with all the other DAF fund accounts they have, right? So you might not have to do your full, 3.5% to 5% every single year. It could be less. Some institutions make you do sort of the 5%. Really different, depends on where you go to. The administrative costs end up being sort of whatever the asset balance is and investment management fees. You cease having control is the big difference. So in this sense, you are really, your sole responsibility is to give direction on where you want the grants to flow to, right? You don't control anything else, but that's where it goes. And in terms of sort of anonymity, you can be as anonymous as you'd like. So from a CRA standpoint, they look at sort of what is the top level charity. So using RBC as an example, we use Gift Funds Canada. So CRA is looking at Gift Funds Canada to say, what are the assets, where the grants gone? They don't see the individual funds below that. So you can grant out anonymously if you want, right? There's nothing that's going to sort of allow your information to be seen. So again, sort of, rolling into that, what are the benefits that donor advised funds have? And really, it allows you more time to plan and take that time to figure out what impact you want to have, right? So it's all about sort of, you don't have to sort of move with as much urgency as everything, and you take more time figuring out, okay, I want to do grants here. You can do test grants in lower amounts. It's a great way as well to involve that next generation, right? So you want to sort of get your kids involved and have them learn how to give. It's a great way to do that, to help them sort of learn those principles and values that you might have developed from, maybe your parents. You can have your estate, right? Have it incorporated into your will as well, fairly seamlessly, and sometimes more efficiently than actually naming, multiple charities in your will. I'll touch on that afterwards. And you can ensure that you can maximize your taxable benefits for charitable intentions. So lots of pros for looking at those. In terms of assets, very robust out there. So obviously cash, publicly listed securities, private company shares can go into those. Private company shares cannot be donated to private foundations because they're not arm's length enough afterwards. You can do options, thinly traded shares, life insurance. On certain situations, they can accept real estate, and then potentially art and collectibles. Really sort of, for your private company shares, options, real estate, life insurance, that's always accepted on a case-by-case basis, but generally, it's pretty routine for them to all be accepted. So you have variety with it all. Going quickly into the RBC Charitable Gift Program. Really, this is our in-house solution that we have. And the idea is, you want to sort of make a charitable impact over time. So you would, do a donation in to this fund that you created, get your tax receipt. The funds, if you, would be, in this case, sort of continue to be invested by Kareem, right? It's not moving off somewhere else. It's staying still with Kareem. He's your principal contact for everything. So it stays there. And then, all those funds are being invested. They're growing tax-free over time. Then, you're just coming to us and saying, I want to grant $1,000, $500, $10,000, whatever the amount is to X registered charity. And that will be processed that way. So very versatile. As I sort of might have mentioned a bit, it's administered by Gift Funds Canada, a registered public charity. We ask for, it has a $25,000 minimum to open the account. Once it's open and you go down below that threshold, you can still give. It's, it's not like other institutions where once you go below the minimum, they don't allow you to continue to give. We will say, as long as you start with $25,000, even if you grant it down and have $5,000 in there afterwards, that's fine. You are able to personalize it with your own name, which you can change at any point. You can grant advisor, so people who you also want to be able to do grants out. You can designate fund successors, so people who to take over your fund once you no longer want to act or you pass away. So great way for a family succession. Or you can have a legacy intention, which we have information on file that says how you want your funds to be, how the funds in your account to be distributed after you pass away. Again, one of the bigger benefits that we have over other institutions out there is we do not impose a disbursement quota. So as I mentioned, sort of registrars have to do 3.5% to 5% annually out because of the economies of scale in the size that RBC has and our giant pool of donors that form part of this. We do not impose that quota on you. So you could go and donate a sizable amount, maybe it's $1 million because you had a sale of business. You can then take, a year, 2 years, 3 years to figure out how you want to give without having any pressure on having to hit a quota amount, right? Everything moves at your own pace. So we have that's a large difference. For, we can do further distributions in at a minimum of $250. Gifts can become from personal, corporate, Friends, individuals can use these for golf tournaments if they want, for donations that way. That's been done. So lots of different methods to use it. And again, sort of, we're established generally in about 3 days we can get this open. Growing, you work with Cream. He helps sort of figure out what your time frame is for your giving, and sort of matches a standard investment policy statement to that, to sort of go off and grow that everything that's inside there grows tax free, and you're able to sort of it's managed a bit of it in sort of a conservative balanced approach, but generally it's still that's sort of to maintain as much capital as possible, and have proper growth. But the idea is that this is for longevity and can really work out well for you. Granting, it can be done sort of on demand or in advance. So if you like to give every single year in December, you can fill out a form and submit that in June. And it's staying there on file, and then everything kicks in later on. You don't have to do anything. So it's nice that way. We don't say, outside of having to sort of do a minimum of at least $250, there is no other, minimum or maximum outside of that. So if you want to grant the entire amount out, you can. If you don't want to grant anything, you can do that as well. So that's nice to have. The restrictions, again, and this is sort of similar to every charity in Canada, is it has to go to another registered Canadian charity. But there's 75 others to choose from, so we have good selection out there, and that's where another service that I have is I'm able to help you identify what those charities might be. Again, sort of mentioned, grants to be made anonymously, partially anonymously, or under the name of the account. So really, you're allowed to be as visible as you want when reaching out to these charities, and you get to sort of decide on sort of the grant letter as well and how restricted you want it. So lots of versatility there. So looking now sort of in our final component, going into sort of estate planning and charitable giving, which is becoming a bigger and bigger component that we see every time. What are the different strategies and different ways out there? So looking at sort of your general, just in your will, you can do residual gifts. So that's a percentage amount, or specific. So that's sort of a dollar amount. So you'll see, someone say, I want to give $20,000 to the Humane Society. So that's that way. You can just do it where you name a specific, if you have sort of a large amount of RBC stock and you want that to go somewhere, you can just name that as well. Right? You can also sort of go in and designate beneficiaries on your registered retirement fund, your TFSA, or your life insurance policy, right? You can, as I sort of mentioned, you can incorporate your donor advised fund, like the RBC Charitable Gift Grant, into your will to make it even more seamless for what you want to do later on. And you can also sort of work towards sort of, moving complex assets can also be given and facilitated that way. So really anything that you can do in life, you can also sort of do through your estate planning with proper planning. So just, some of the benefits of when looking at, naming charities in your will versus going to your charitable gift fund, if that's what you do. So naming into your will, when you're, when the charities are being sort of, at the point where your estate is now distributable, the charities will get a lump sum payment to themselves, right? So that's one thing you have to understand. It's a single one payment. And maybe it's a few, and then maybe a couple smatterings as sort of all the tax implications that done. If you ever want to change your will and anything in the sort of the amount that's going to those charities or the percentage, or even just changing the charities themselves, you have to go through a lawyer and either get a codicil or redo your will. And what happens if your the charity you've chosen is no longer in good standing, or ceases to exist? So lots of things, and that makes it difficult for your executor at that point to facilitate. So if you utilize your charitable gift account, instead of naming 3 charities in there, you just name a single charity, right? And then we would have on record, either a legacy intention form, which says exactly how you want those funds distributed. So you can still have those 3 charities listed you originally had, but now it's broken down to, I want these funds to go out over the next 5 years. I want them to receive, 2% every single year from the balance. You can pick the month. If X charity ceases to exist, you can have another one already on there. So a substitute is already there. So it sort of makes it much easier. And that form, our legacy intention form, can be updated as many times as you want. So it's, take the will wording, have this account opened, you go to your lawyer, it's inputted into your will, and then any changes later on for which charities you want to give to, what amounts, what percentage, is all done on sort of a external form, which makes it much easier for you instead of having to go back to your lawyer and pay for that. So if that's what you decide to go forward with, we have language that can be given to your lawyer. So that's all there. So it's nice and easy. Just hand them the form, and we'll give you the account number for the input. So that ensures that's done. And then, just going back is, nothing is charged. There's no fees. Nothing is done until this fund is actually funded and you pass away. So there's no upfront fee. There's nothing you have to worry about going ahead of time. Everything can be changed even after it's been implemented into your will, right? So if you want to change the name of what you want the foundation to be called, we can do that. If you want to have a family member take it over instead of having it going to other charities, you can do that. You can change which charities are the end results. So it's nice to have that extra flexibility, especially when you're sort of doing a will and you might live for another 20, 25 years. Instead of having to go back all the time and going to a lawyer, you can just update this form, right? And it can be something you just standardly do at every single, annual review. So this is our intention form. So you can sort of see it's pretty robust on the options. We can have things written in there too, but it's looking at what organization do I want to support? Is it restricted, unrestricted? How do I want to be recognized? That's there. How much I want to just send out every single time. So lots of options for it, which is what we want to have is everyone to have more versatility, more flexibility in their giving. Just quickly going to do a case study so you can see some of the other different ways that someone could use their charitable giving strategy. So coming through, so I want to concentrate on a RIF. So one of the largest avenues in which we'll have the largest deemed disposition once you pass away. So it's always looking at how can we lower that tax hit, right, as funds come out, but also sort of ensure that we don't have a larger sort of non-registered account where it's there's gains in there that'll be large as well. So looking at this example, we have Jill, who's a lawyer, has done very well for herself, doesn't require really the income that she has to pull down every single year from her RIF. So she's looking at what are her options out there, knowing that every year she has to bring down minimum $50,000. So standardly, what we normally see people do is the $50,000 is taken out of the RIF. There's taxes that will have to be paid on that, and then she's just shy of $25,000 can then be used to be reinvested in something or just sort of cash at hand for the day-to-day. Another approach that we've seen very successfully implemented is donating to offset those amounts. So still the RIF payment has to come out. However, a donation to a gift fund is done instead. And that donation is done from the non-registered account where there's appreciated gains. So looking for something that has a high capital gain in there. So doing an in-kind donation in that manner at the same level. So a $50,000 gift there. Your charitable legacy gets boosted because you're going to be able to contribute there, but your taxes come down significantly. So the difference ends up being about a $99 difference between what was come out of the RIF and what the taxable event is. So you're looking at, basically the taxes being offset for taking those funds out of your RIF, but also your non-reg portfolio now has $20,000 less in capital gains, future capital gains you have to worry about when you pass away. So it's a nice win-win there to sort of find a balance. And lastly, just want to touch on insurance strategies. People always curious, how can I use insurance? Really, anything with insurance comes down to when is it needs to be most utilized. So do you need a tax suite more in life or is in death? So if it's in life, then you're looking at, you can donate a current existing policy to a charity. They can accept that. You'll get a tax receipt for a one-time gift for the fair market value. And then if there's any outstanding premiums that have to be paid, if you were continue to pay those premiums, you would get a tax receipt for those premiums going forward. You could also open a brand new policy as well. That could be done within charitable gift fund. And as you sort of continue to pay those premiums, you could sort of look at do that way and get tax receipts for there. You could also use public traded securities to pay for those premiums, right? So you're getting even more benefit there. And it's a nice way, especially with the policies, is you can have a bigger legacy once you pass away, right? You can't really sort of compete towards the future growth that can happen within a life insurance policy to in life. And then in death, probably the more common use that we see is life insurance used for in death. And a lot of generally the approach is looking at what is my future tax liabilities going to be for my estate, and having a policy that will sort of recognize that full amount to offset that. So if it's believed you'll owe $200,000 in future taxes through your estate, you get a policy that's going to pay $200,000, but you designate it to a charity. So the charity gets $200,000 right away, and subsequently your estate gets that $200,000 charitable tax receipt to use to knock down those taxes. So lots of different options out there, and very good solutions that, really depends on each individual situation and what they're comfortable with. So that's something for like a separate meeting. So if you are interested, like reach out to Kareem and start having those conversations. And happy to sort of answer any questions now, and any future ones that come through from Kareem afterwards.
Well, Angus, thank you so much for a wonderful, wonderful presentation. Really appreciate it. We've got a whole bunch of questions here. But I will sort of try and summarize into 3 or 4 different points, in respect of time that we've got left.
Yeah.
I guess the first question came in. I think I know the answer, but I'd love your thoughts on it. Is the recent capital gains changes that were passed yesterday, does that change any of these strategies at all? Does it impact any of these strategies?
It will a little bit, but not too much, really. From a sort of savings in the capital gains, when you do an in-kind donation, that's still going to get the fair market value, so not zero it out. We're likely to see a larger push of people who also have sort of holding companies or corporations doing more giving from there for the savings. We have, generally sort of from what we've seen is that most people aren't going to have to act on sort of go past that $250,000 minimum capital gains exception we still have the 50%, but corporations are hit right away. So we think we'll see a larger influx of corporations giving, just because the personal might be more protected in a given year. Yeah.
Okay. So basically the answer to that is a possibility. Yes, it could impact.
Yeah.
It's each individual situation is different.
Yes.
And has to be addressed separately, right? Okay.
Yeah.
Okay. Most of the questions were pertaining to sort of the donor gift fund program that we have, that RBC has. Can can anyone, let's say, for example, a family sets up one of these, and let's go the Thompson family sets up a foundation. Who can donate or who can contribute to this particular foundation or this account, charitable foundation is set up, and would they get the tax receipt and stuff like that?
Yeah, so anyone can donate into these funds. So friends, family, corporations, holding companies, whoever donates into it receives the tax receipt and the benefit from that. So
Okay.
it's a great way for could be a generational family coming together to want to sort of to give in one simple manner. It's a great way to do it. Even if someone wants to do an event, as I sort of mentioned with the golf tournament, we've seen use there where it's basically charity golf tournaments going on. There's just a form people are giving, checks, cash, securities, what have you for it. They're still going to this fund in the end. Whoever gives in there gets a tax receipt.
Yeah. Okay. So it's not restricted to whoever actually set up this donor gift fund, right? Any
No.
friends or family
Yeah.
can donate.
Yeah. Yes. The only restriction is that whoever opened the fund retains the right to grant out to organizations. So there has to be, internally
An
amongst
alignment.
them, the alignment with them for how they want to give. Yeah.
Okay. Go back to sort of the private foundations. Long time ago, if I recall correctly, just looking at history, before this donor gift fund program was available, the only option for families or individuals who wanted to create such this legacy, I call it charitable legacies. Right? So these are legacies that can go on for a long, long period of time, right? 5, 10, 15, 20 years or whatever. Before this donor gift fund program was available, a private foundation was the only option for them to do, right? Can you talk about the cost to, like, if someone were to set up a private foundation versus one of these donor gift funds? What's the cost difference? Is there a cost? I know you mentioned there's no cost to how are we setting up. Can you speak to a little bit of cost about that?
Yeah, it's really for a private foundation. It's the biggest cost comes in the initial setup and the time there, because to set up a private foundation either has to be a corporation or a trust. That has to be done through the lawyer. You're looking for, depending on the complexity and where you want to give, that could be anywhere, looking at you're probably closer to $15,000 in the end to get that set up. And then really, an ongoing costs aren't too bad, $3,000 to $5,000, depending on sort of who you have as your accountant, and any sort of outside consultants. But sometimes it's the time commitment that you have to do for it and the responsibility to it, and then responsibility. So to have that going on, you'll need to have, the board of directors has to have, regular meetings. They're responsible for reviewing all the financial statements and the audit to make sure that's done correctly and they're comfortable with it. They have to decide where the granting's going to go. They have to decide on how things are invested, what sort of assets they will accept. So lots of different work to it. So we're really seeing the change has really been on, people have interest in private foundations still, but going beyond to how do you get to those next generations? Think of it similar to, small businesses out there. Usually you see a transition as, first generation opens it, the second generation comes through. That one might still keep going, but by the time you get to the third, what has happened? Does it still have that sort of, that push and impetus of wanting to run it? Do they have time for it? Is that where their interest aligns? Sometimes that wanes and the business, has to be sold or closed up. Same thing happened we've seen with private foundations is that, started by the grandparents. Maybe the kids have come along and now the next generation will be the grandchildren, but maybe there's just not the time commitment or the desire to want to have to run a day-to-day, business essentially, to make sure it's operational to its efficient amount. So that's where the donor advised fund really comes in to its own, is that you can still have that family harmony, that longevity of it going through different generations, except you don't have to do all the administrative work to it all. So, with any donor advised fund program out there in the country with RBCs, there's a fee obviously associated with it. But that's to be expected because all that work that you normally have to sort of do yourselves is another organization doing that. So,
Right. And as far as last question, as far as reporting for these donor funds, donor sponsored funds, the family or the individuals that set up this particular accounts are able to get regular reporting, get online access to the account, just like any other investment account, right? Except it's a charitable foundation, family foundation kind of thing. Am I correct?
Yeah, every donor advised fund out there is a little bit differently. RBC, we send a quarterly statement out to the clients. We haven't developed a portal yet for them to access all the time, but we do have, quarterly statements do go out, and then you would have access if they wanted to know what is my current balance. You would be have that day-to-day access to be able to see exactly where it stands at.
Where's that?
Yeah.
Okay. Fabulous. So, Angus, you've answered all the questions that have come in. As I said, most of the questions were either taxation or on this particular RBC donor fund. So great. Before I give Angus the last thoughts, anyway, if anyone out there has any specific or general question on charitable giving, any aspect of charitable giving, philanthropy, one of the things that Angus mentioned is also giving your own time, right? So giving back to the community doesn't only have to be through financial resources. Giving your own time is also very, very important. So if anyone out there who has any questions, general or specific, or myself or Angus, please feel free to reach out to myself. My number is 416-956-8888, 416-956-8888, or my email address again is karim.visram@rbc.com. Before I close, Angus, any last thoughts, any last questions, suggestions, anything that you may want to add?
No, I think for anyone who's sort of, wanting to sort of learn more about charitable giving and start your own journey, please just reach out to Karim, and he can set up a meeting with me, and we can help you sort of walk through all these different steps available to you and help figure out which giving vehicle solution, the best way forward will work for your individual situation to make sure you get the desired impact you want to have.
Fantastic. Thank you again, Angus. Thank you so much for your time, and fabulous covering all the different aspects of philanthropy or charitable giving back. So I really appreciate your time. Thank you, everyone, for joining in today. As I mentioned, this presentation is recorded, and it will be sent out in the next week to 10 days. In the meantime, if there's anyone any questions, please reach out to me. Other than that, have a wonderful rest of the nice afternoon and the rest of the week. Thank you, Angus. Thank you, everyone.